Welcome my top 10 people I would trust with my last slice of pizza. Please remember this is not financial advice. Bitcoin has just made fresh yearly lows and is now testing one of the most important long-term levels on the chart, the 200-week simple moving average. Historically, this has been a very strong area for buyers to step in. Every major bear market has eventually found support around this level. But it's important to remember that Bitcoin can and does trade below it during periods of peak fear and volatility. In the previous two bear markets, it fell about 30% below it. At the moment, the US dollar appears to be the primary driver of this move. The Federal Reserve has kept interest rates elevated for so long that it's made it extremely difficult to bet against the US dollar. If we look at the weekly dollar index chart, every time the dollar has approached the 96 area, sellers have backed off. They simply haven't had enough conviction to push it lower. To get a sustained move lower in the dollar, we will likely need two things: a Bank of Japan rate hike and a Federal Reserve rate cut. Until then, any weakness may be temporary rather than the start of a larger downtrend. Last week we were looking for dollar long opportunities, and so far that view has played out. The breakout was ultimately triggered by the non-farm payroll report, but honestly, the market was already telling us the dollar didn't want to go lower. Why does this matter for Bitcoin? Because volatility is expanding. And if volatility continued to expand, Bitcoin could continue breaking lower and take out additional liquidity beneath current prices. From a risk perspective, this is a very dangerous area to be aggressively long. Price is trading below strategy's average cost basis, and historically these periods can produce violent swings in both directions. That said, I do believe we're getting closer to a relief bounce. We have already liquidated the yearly low, which removes a major pool of liquidity from the market. However, there is still another important downside target. The next major liquidity level sits below the fourth quarter 2024 low, which has not been taken out yet. That level comes in around $58,890. Also, you can see on the monthly liquidation heat map. So if you are looking to build a long position, just understand that there is still liquidity resting below current prices. That doesn't guarantee we'll get there, but it's a level that market could still be attracted to before a large recovery begins. And that's why I posted on X. The KEMA moving average was a very good indicator when to get in Bitcoin, and we are still very far to start to accumulate. These lines indicate the Bitcoin halvings. So Bitcoin is 53% through the current halving cycle, which started in April 2024. So all in all, on the near term, I expect a bounce soon. On the longer term, I am still bearish. If you like the content, please like and subscribe and check out my channel. Have a nice day. Bye!